Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I want to share with you 5 different companies that are undervalued at the moment. These are quality businesses that you could potentially research a bit more. I'm going to give you the overview. The reason I want to share this with you is we are in a very difficult position right now in terms of what the markets are doing right now. In the next 2 to 3 weeks, I think is going to be very interesting in terms of the overview of the economy and what might happen in 2023 and possibly continue into this negative sentiment possibly into early 2023. So when you basically look at around and the companies that are available to us, one of the things that I like to do is basically find companies that are quality businesses and then just hold on for obviously 5, 10, 15, 20 years. And this portfolio I started in 2020. There's some companies that have been in this portfolio since then. So the plan is to show you these companies and hopefully you take care in terms of doing the rest of the research and so on. But before we get to that, 2 things is going to happen. I want you to do me a favor and just click that like button because it really helps the channel. And the second thing I want to share with you guys is the S&P 500, just to show you where we are this year. So 2023 started literally on the 3rd of January 2023 when the market opened. That's the days that they started going down. Up until now, we've been going up and down, as you can see. And right now, the S&P 500 will probably close this year plus 20 something, minus 20 something. So 20% or more down just for this year. And that is quite a lot. And when in comparison to what happened in 2021 and 2020, even though we had a huge crash at the beginning of 2020 because of COVID, by the time that year finished, the S&P 500 was a positive, right? And massively up. 2021, it was untouchable. 2022 has been absolutely crazy. 2023 will be interesting because that is when we will find out if the US is in recession. We know the UK is already in a recession. The interest rates were the UK is about 10%, US is about 7%. Basically the target is to bring it down to 2%. So the S&P 500 is down 20% up to date. Right now, the Dow Jones is down about 10.5%. The Dow Jones only has 30 companies, and these are very mature companies. Okay, they have a free cash flow and so on, but they've done better than actually the S&P 500. These 30 companies, the QQQ, which is basically the Nasdaq, if you like, the ETF that tracks the Nasdaq, is year to date is down about 32%. So this has been undoubtedly the one that have been hit the hardest. Okay, and it bounced back and then it's kind of gone down again. But as you can see, every single basically market, every single index is down quite a bit this year. So it kind of gives us the opportunity to look around for quality businesses. Hopefully, if the sentiments change, then potentially we could add these companies to our portfolio for the next 5 to 10 years, hopefully. So what I want to share with you guys today is 5 different companies that are undervalued at the moment. Give you the overview and then you take care from there, inshallah. And then I'll show you in terms of Sharia compliant where these companies are. So let's have a look at the first company. And this company is Roper Technologies. The company designs and develops software and engineering products and solutions. The company offers management solutions, diagnosis, laboratory, information management. It offers enterprise management, information solutions, transportation management, financials and compliance management, and cloud-based financial and analytics and performance management software, cloud-based software. They have so many different products that they actually, and they work with quite a lot of the big companies out there. So they are a tech company as well as industrial company. They actually are, I think in terms of sector, they come under the industrial when it comes to the sector side of things. Oh no, actually it is information technology. My apologies. And they have a lot of application software that they actually manufacture to these companies. So as you can see right now is $46.5 billion market cap. It has wide economic moat, $422 per share. Right now as we speak. Dividend is quite small, less than 1%. Latest increase was 10%. 5-year growth rate was 13%. Payout ratio what is basically 16% right now. Dividend streak of 29 years, so they are a dividend aristocrat. Safety 98%, profit margin 53%, and 22% return on equity. $1.1 billion of free cash flow, total return of 15%, and 12%, almost 13% growth expected in terms of earnings expected the next year. Growth estimate next 5 years is 11%, and then so basically when it comes to Morningstar valuation is 17% discounted, and 530 basically is the target. So right now I want to share with you guys, one of the brothers have asked me recently to show them how I actually find the estimates. Okay, so there's two places that you can get that information from. If you go to Seeking Alpha, type the stock ticker, and then you click earnings estimates, scroll down, what you will see is, for example, earnings estimates. So the first one is consensus EPS. So this is the earnings per share, what they expect from the next 2 years. The rest of them are locked because you have to have a subscription. I don't right now. So as you can see, they're expecting about 14% this year. So 14.14 of dollars basically earnings. So this year they're not expecting much of a growth, but the next year they're expecting about 13%, which is what we've just seen. Okay, so that's in terms of EPS. In terms of the overall revenue, okay, estimates is 5.93 billion right now. This year they basically was 5.37, so there's a bit of growth. There's 10% growth this year. You could do the same thing, okay, if you go to Yahoo Finance and then click analyst, you scroll down, what you see growth estimates for the next few years. So next year, so current year, as you can see, is negative, like what we've seen already. Next year you can see 12.7, and the next 5 years we're expecting every single year per annum they're expecting almost 11%. So that's how you can find it. You can also see the past as well. If you want to see how the companies performed the last 5 years on average, okay, per year, they averaged about 8%, which is actually quite good. And as you can see, you can also find the other things like the analyst expectations, the average cost in the current price, and all of that stuff is in there as well. So that's the first company. The second company we're looking at is Cisco. Cisco is basically a network company, the one that I actually own in my portfolio. I've done quite a lot of research on that company. If you're interested, find out a bit more information. Cisco, right now, it has $203 billion market cap. It has a wide economic moat, $47 per share right now. 3.16 dividend yield, which is absolutely amazing for technology company. Latest dividend increases was 2.7, which is not bad. It's okay. I normally like 6 or more. I think this company will start growing that in the next few years because they do have excellent free cash flow, and then their revenue is actually growing a lot more than in the last 5 years. So hopefully they will start increasing that. The payout ratio, based in terms of a 5-year growth rate from the last 5 years, we're looking at about 6% on average. Payout ratio only 44%. 11 years of increasing that dividend. Safety 91%, profit margin of 23, return on equity 29, almost 30%, free cash flow $13.2 billion. I love the fact that they've got a lot of cash in there, and total return in the last 10 years almost 12%. Next year they're expecting about 8% almost growth, earnings growth, and then growth estimates for the next 5 years is also 7%. Discounted right now about 9%, $554 per share is where it should be right now. 49. I think my overall, I think it's about mine. Let me actually quickly look at what my average is. My average is 45, so actually slightly lower than that. Okay, next company we're looking at is Skyworks Solutions. This company is a semiconductor company, works well with basically a lot of their revenue actually comes from Apple. They work with a lot of the big companies out there, and especially Taiwan Semiconductor and so on. So a lot of the chips that are being made, some of the devices that go into it, this company actually makes those. Okay, they have a proprietary semiconductor products in the United States and the big China, South Korea, and so on. They have wide range of devices and the products that they actually sell to company. So $15.5 billion market cap, has a narrow economic moat, $92 per share, dividend yield of 2.65. Latest dividend increase is 11%, 5-year growth rate 11%, as 15%, 20% payout ratio, which is very, very low. They definitely have the potential to increase that dividend even further. The fact that they increased it recently 11%, they can even do more than that next couple of years. 8 years of increasing that dividend. Safety only 68%, which is absolutely fine. 61 and above is absolutely fine. Profit margin 23%, return on equity 24%. They have 900 million dollars in the bank right now, and that's a free cash flow. Total return in the last 10 years almost 19%. Next year they're expecting 13.4% growth in terms of earnings, and then the next 5 years after that 10 basically percent. Right now 37% discount right now. I think it's down quite a bit with the rest of the semiconductor companies. As you know, semis have been hit very, very hard this year. $155 per share is where it should be right now according to Morningstar. The next company we're looking at is Autodesk. This company provides 3D design, engineering and entertainment software and services worldwide. It's one of the companies that have been really, I've been looking at it lately for quite some time in terms of non-dividend, for my non-dividend portfolio side of things. $41.9 billion market cap, has what economic more, $191 per share. Obviously, they don't have any dividend, still growing the business. Profit margin, we're looking at about 12.6. Return on equity 78%, $1.8 billion of free cash flow. Right now we're looking about 18, almost a 19% of total return in the last 10 years, and next year they're expecting about 10, almost 11% growth, and then year basically afterwards, the next 5 years afterwards will be about 20%, which is quite high. And then right now 16% discounted, $230 per share is where the stock should be right now. The final company we're talking about is Align Technology. This company sells dental aligners, is right now $15.7 billion market cap. It has a narrow economic mode, $194 per share. They don't pay any dividends yet. 13.20 profit margins, return on equity 14%, and they have $350 million in the bank right now. Total return in the last 10 years, we're looking at about 13%. Next year, about 11.3%. And then growth estimate after the next 5 years is 43%. And right now is down almost to 40%. $331 per share is where the price should be. Now, some of these companies are obviously in the tech companies, especially Align Technologies and Autodesk and so on. So you have to be really careful, because right now, the way the economy is going, you can't really afford to actually have the type of companies these companies are. So if they are quite speculative, not very speculative, but technology companies are not very attractive right now. So a lot of people are staying away from it. But for that reason, I actually am looking at these companies thinking maybe in the long run, some of these companies will be a very good addition to my portfolio. Because if I'm looking at for 15, 20 years from now on, if this company isn't doing well right now, and if 16% discounted and the earnings and everything else is growing 20%, 10% every single year, then why am I worried about what might happen in 2023 when my time horizon is 2030, 2040, inshallah. So yeah, just to think, something to think about. I'm not saying I'm definitely going to add all of these companies to my portfolio. I'm not saying you need to do that either. Do your research, find out a bit more information. I've just kind of given you an overview. Is if you're interested, for example, Align Technologies, I know some of you actually are, then go into, for example, other websites that have a bit more information about the company. Okay, find out in terms of if they're obviously healthcare company, the medical device company, find out how much free cash flow the company has, for example, find out whether they're undervalued, overvalued, narrow economic mode. Read some of the analysts and what they're saying about the company. Okay, you can find out so much information about these companies by just going to any website. If you're interested, for example, Robot Technologies, you can also do the same thing. Go to Seeking Alpha, go to the summary section and find out a little bit more information about the company. How much are they actually down this year? Okay, are they up? Are they down? Look at their financials. Look at their earnings, for example, the expectations for the next couple of years, or the expectation just for the next quarter. How much actually are they expecting? Okay, in terms of estimates and where they are. In terms of dividends, if the company pays a dividend, actually, where are they right now? What's the yield right now? What is the payout, for example? What is the payout ratio? So how much would that be gained annually? The 5-year growth rate, like the fact that they've actually increased that dividend for 15 years or whatever. When the next dividend, so there's so much to look at. Then the final thing you could do is go to the company itself, their website, and read the financials. Okay, if you want to know, if you're looking for dividend growth company, for example, look at the dividend growth. Okay, look at this graph here. Okay, for the 10 years, have they actually increased this dividend? Absolutely. Look at this one, starting from 2012, and right now they have been increasing that dividends. So this is the type of research that you need to do, and obviously to know a little bit more about the company, their revenue, where they are now, where they're heading, and so on. And yeah, that's it. Have a wonderful day. Assalamu Alaikum.